So traders, we know we're getting towards the end of this rate hike cycle, right? We know that interest rates have been going up for quite some time when it comes to the overall interest rates, the long-term rates, and even the short-term rates as well too. So this here, if you don't realize, could actually create a really good opportunity for an investment opportunity that could last for the next couple of years. So as this cycle is happening, I'm going to share with you exactly what I'm doing to benefit from this. Let's get straight into it. Don't place a trade based on what you're seeing in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, just want to let you guys know that today is the very last day that you can get access to. I'm celebrating my son's birthday with a 95% off my Inner Circle coaching program. Today is the very last day to get access to that. That very first link in the description, click on that there, guys, and you'll be able to get access to that. Again, this is the last day you can get access to it. So the thing is that as we know, right, we're getting towards the end of this overall rate hike cycle, right? The Fed funds rate. Now, obviously, the Fed funds rate. Oh, that's TMF, right? So the Fed's fund rate, as we know, the Fed's funds rate has actually really made a really big move to the upside, and so has the overall other rates, right? The 2-year, the 30-year, and the 10-year. We've had some really big moves to the upside, and so we know we're getting very close towards the top of the rates, right? So if we do have another move to the upside, it's probably going to be the last move to the upside before we see what? Before we start to see the rates come down, and we know that, right? We know. Over the next, say from now through to the end of next year, if we look at that, say, what's that, 15, 16 month period, what's likely to happen with the interest rates? Firstly, the Fed's funds rate, what's going to happen to them? They're going to pause, and then they're going to pivot, right? Then they're going to start to cut rates. So we know that's what's going to happen there, right? Also, what's going to happen? We're going to go into a recession. Also, what's going to happen? They're going to start to print money. And what does that mean? That means also that they're going to start to bring the long-term rates down as well too. But in the meantime, I believe the free market, which is the long-term rates, which is the 10-year, the 30-year, these sort of rates, I believe are going to start to pull back just because the free market's taking control there. So when we are looking at these overall markets from here, right, and we're looking at these markets, we can see that the 30-year could actually have a bring back. The 30-year could actually pull back down to around about that 3% level. The 10-year, looking at my long-term trend line, we could actually have a move back down towards, if we have a drop through here, this is the daily charts. If we have a drop through, we could get down towards that maybe 2%, maybe even maybe down to 2.6, somewhere around there. So we could get a move back down towards this longer-term trend line. Now, when that happens, right, when this overall happens and we start to get this movement on the downside, and especially even the 2-year, right, the 2-year is definitely like massively to the upside. As this happens, right, there's going to be opportunities in the markets to take advantage of that. The first one is TLT, right? So if you guys don't know, TLT, as what I've just said there starts to take form. Now, the thing is this, guys, right? The thing you must understand is that this takes time to understand. It takes time for this thing to unfold. It may take another few more months or more for this thing to really get going. It may be next year that we actually start to see this thing really get going. Make sense? So this is not a guaranteed no risk in the markets. Firstly, okay, there is always risk in the markets. Now, secondly, is that you must understand that if you get into this position, if you get into a trade and the market goes down 5%, you can't freak out, right? Because it's just looking at the overall cycles and how they're playing out. And they're probably, the long-term rates, 10-year, 20-year, may actually have another move to the upside first before we actually come down. But I believe we're getting towards the end of this move. And as we know, especially coming into 2024, guess what's going to happen? Rates are going to come down, and when that happens, guess what's going to happen to TLT? We're going to start to rise. TLT is going to start to rise, right? TMF is also going to start to rise as well too, right? We're going to start to see this really incredible move to the upside in TMF and so on and so forth. And especially in the recession, as they really bring rates down, we're going to start to see a big rise in these markets. Now, again, guys, as I said before, that there is a possibility, if you're looking at, say, TMF, that there is a possibility that if rates do go for another move, we're going to get something like this in TMF, right? We're going to get a drop in TMF. That's what's probably going to happen. But then we're probably going to start to see something like that as this overall cycle starts to take place. So there we go, traders. There's the sort of big thing as the overall rate cycle ends and we start to cut. There are opportunities out there for you right now underneath our feet to take advantage of. The only thing you must understand is this is not a trading opportunity. This is an investment opportunity that you buy. You say, okay, then by the end of next year, we should see rates coming. We should see rates coming down. Fed funds rate, the long-term rates, and as that is taking place, then you can really benefit from this happening as well too.